Good evening, everyone, and welcome. A modest stock sell-off today put the final nail into a down week for equities. Their first after 5 straight weeks of gains. Wary investors sent the major averages lower despite good news about consumer spending and a strengthening U.S. dollar. Investors lightened up on stocks as Treasury yields moved higher and crude oil and prices on other commodities continued to slide. At the closing bell today, let's run through some numbers. The blue chip Dow stocks down 61, the Nasdaq skidded 24, and the S&P drifted lower by about 12. For the week, the Dow was off about 1%, Nasdaq off a fraction, and the S&P down more than 1%. As for the dollar, it strengthened against other major currencies for the 9th week in a row. A big factor in today's slide, caution ahead of 3 big market-moving events next week. 1, the latest policy meeting by the Federal Reserve on whether and when to begin raising interest rates. 2, Scotland's independence vote, which could send currencies and markets here and around the globe into turmoil. And 3, the initial public stock offering for Alibaba, the Chinese e-commerce giant, which is expected to be the biggest IPO in history. We have 3 reporters taking a closer look now at each event. Steve Leisman on the Fed, Michelle Caruso-Cabrera on Scotland, and Kayla Tausche on Alibaba. We begin with Steve and the Federal Reserve.
It could be a September Fed meeting to remember. The central bank is 1 month away from ending its bond purchases or quantitative easing program, and there's some speculation it could take steps at this next meeting to clear the way to eventually raise interest rates from their current level of 0. All the focus will be on 2 words. The Fed's policy statement says they will wait a, quote, considerable time from when it ends QE until it hikes rates. They can't raise rates until they get rid of those words, and there's some guessing that those words could go as soon as next Wednesday's policy announcement. Many on Wall Street put the odds at about 50-50. If they do go, then the speculation is that could mean earlier rate hikes than the market now expects, maybe in the spring of 2015 as opposed to the summer. For Nightly Business Report, I'm Steve Leisman.
A key event next week is the Scottish vote for independence.
Scotland says no!
Will the Scots decide to end their more than 300-year union with England as part of the United Kingdom? The latest polls show the vote is too close to call, and the turnout is likely to be extremely high, perhaps record-breaking. The British pound has suffered on the news that the United Kingdom is not so united, and the campaigning on both sides of the question is intense. The supporters of independence say Scotland will be economically stronger if they break away. The No campaign says Scotland will suffer economically if it goes out on its own. Nearly all the banks headquartered in Scotland say if the Scots do vote yes for independence, they will relocate their headquarters to London because they feel the need to be certain that they will remain protected by the Bank of England rather than face the uncertainty of what Scotland is going to do about its currency, which isn't clear. The leadership of the European Union extremely nervous about the vote. They fear if the Scots vote to leave, it will embolden other separatist movements like either Catalonia or the Basque regions in Spain, or parts of northern Italy, which have long agitated for independence. In other words, they fear it could lead to the unraveling of a union that they've worked so hard to keep together. For Nightly Business Report, Michelle Caruso-Cabrera.
Demand from investors for hotly anticipated shares of China's e-commerce giant Alibaba is stacking up ahead of the company's IPO next week. Nearly 40 large money managers have put in orders for more than $1 billion worth of Alibaba stock. Now, of course, they will only get a fraction of that, but the company had only said last week that it wanted to sell about $20 billion in stock. So you can see that we are already at multiples of what the company had planned to sell. That could lead it to price the IPO above the expected range. The company had outlined a range of $60 to $66 a share. Now, here's why investors are so interested in this deal. Number one, because of its growth. Profit has tripled year over year. And number 2, because of its size. Profits of nearly $2 billion in the most recent quarter and margins of nearly 70% make this one of the best capitalized and fastest growing names in the tech market. Not to mention they do more business than Amazon and eBay combined. That, along with the size, is leading to this to be the largest IPO in the U.S. or globally and in the technology sector ever. It looks set to best GM's record of selling $20.1 billion worth of stock in 2010. For Nightly Business Report, I'm Kayla Tausche in New York.
Nick Colas joins us now to tell us what those three big events that you just heard about will mean for the markets next week. He's chief market strategist at Convergex. So, Nick, which one is the most important and why?
It seems very much that the Federal Reserve meeting next week is the most important thing for markets as we go into the new week. The reason for that is interest rates. We've already seen interest rates on the 10-year Treasury go from 2.3 to 2.6% just in the past 5 trading days. Higher interest rates tend to slow the economy. They reduce the amount of houses purchased or cars sold. And so that's really top of mind for investors going into the new week.
Nick, does it really matter whether the Federal Reserve raises interest rates in March or whether it does it in May or it does it in July?
You know, the tough thing about calling interest rate cycles with the Fed is you're never really sure where they're going to stop. All you know is that as soon as they start, they're going to keep going. And the sooner they start, potentially the longer rate cycle we have. All of those create uncertainty for investors. And if there's one thing Wall Street hates, it's uncertainty, particularly about the Federal Reserve.
All right, so tell us about this vote in Scotland or Alibaba. Which one is the next, big issue for investors?
You know, the next most important is clearly the Scottish vote. This is something that institutional investors tell me they did not see coming until just 2 weeks ago when the first polls came out indicating that Scotland might be actually ready to leave the United Kingdom. So that's been a big surprise for investors, and it's driven a volatility in the currency market, which is, again, not good for Wall Street.
Let's talk a little bit about what it could mean if Scotland secedes from the United Kingdom.
It's a very tough question to answer because it's basically like breaking up a 300-year-old marriage. You don't really know what the contours of a new Scotland would be. The upshot for investors, however, is a little more straightforward. It'll create a lot more uncertainty in the European economy, and that'll dampen earnings for companies that have European operations. In the S&P 500, for example, fully 20% of revenues and earnings come from Europe over a cycle. So impinging on that growth will hurt earnings here at home.
Nick, we know there's going to be a great voter turnout for that Scottish vote. Any prediction on which way you think it's going to go?
You know, my bias is to think that they're going to vote no, that they don't want to leave the United Kingdom. But it's such a close toss-up that I think you'll see a lot of investors stepping to the sidelines next week awaiting that vote.
Let's talk Alibaba a little bit. You know, you put together initial public offering, you put together internet stock, you put together Chinese stock, and you got a lot of risk. That said, you got a lot of demand for this company. Is this the kind of stock? Obviously, most individuals aren't going to get a nibble at this on the open, but on the first day, they might be able to buy it. Should they?
I'll tell you, IPOs are very risky for a whole variety of reasons, and you touched on a lot of the important factors related to the risk of the company and the sector. So every investor's got to come to their own decision about how optimistic they are about Chinese internet growth. The one thing I would say, though, is that it is kind of a silver lining in all the negatives we've talked about, that the capital markets can absorb the biggest IPO of all time and still maintain a very strong level of stability. So where the first 2 points were negative, this IPO is kind of a positive.
And real quickly, is that a positive for the markets, too? Do you think that if it's a successful offering on, I guess, Friday, will the markets rally on that?
I think very much it will be a sign of just the strength of overall interest in stocks. All our color from our investor base is that Alibaba will price well and trade well, and so it does seem like a positive.
All right. Thanks for all that insight. Thank you so much. Nick Colas with Convergex.